Awesome! I'm super excited. You guys super excited? So in this module, it's the third module, we're gonna look at the 3 foundational core principles that led 7 years to just like massive success in dark pool investing. And then also these are just 3 really powerful ironclad investing principles that are just huge. And I wish I knew these kind of going in. Excuse me, this is kind of one of the reasons, I started with paper trading. It's just awful. It doesn't work. It's just, I talk about it in the book at the end, and it's just, and you guys, but it's all because of this one core concept, and that's sort of the first really big principle that she focused on here. So let's go over to the computer and let's make it happen. All right, cool. So the first fundamental huge realization is this idea of volume. So when you're investing, you need to focus on volume more than almost anything else. It is so critical, so crucial, so important, so key, and it's absolutely huge. That's why with paper trading, it's so awful, because it's not real. It's not real volume. It's not real money. It's not real transactions. And so if it's not real volume, then you're not going to actually get an accurate feel of what the market's doing, which is just crucial, right? Because everything's based on volume. You need to have high volume to support quality trades. This is why with 9 to noon stocks, right? You're scanning at the beginning of the morning for 25, 50,000 shares. That's volume, right? You're looking for the most volume. So you have your big list of 9 to noon stocks. You have your gainers, right? There are tons and tons and tons of tickers, but the most important thing is what? Obviously, the percent gain has to be huge, right? But next to that, it's what? It's volume. Volume is huge, and that's the separator between a stock that goes up, 400% versus a stock that goes up 4%, right? If it's got 50 shares traded versus 50,000 or 50 million or 500,000, that's gonna move so much better. It's gonna be a much better trade, even if this stock right here is up, 110%, and this one's only up 40%. Maybe it's up 50%, I don't know. This one right here is going to move so much more because it has more volume, right? And she presents this analogy that I just think is huge. I never thought of it this way, but it's so powerful and it's so true, and it's massive. And she's talking about this idea of having above average volume, and how volume is key. And then she has this quote that I think is just massive, and it's so powerful. She says, "Volume is the gasoline stocks need to move." Think about that. Need to move, up and down the hill. Volume is the gas, the stocks or the vehicle, right? The car, the instrument. But you need a volume to actually make it move, right? Stocks change prices when people exchange shares. It's all about what? Supply and demand, right? If you have people buying, right? That in and of itself says that people are exchanging stocks, right? It's not just a one-way trip. It's a back and forth motion between buyers and sellers, right? That's the whole point of an exchange, right? You're exchanging with other people. And obviously, there's market makers and people that just buy the bid and sell the ask over and over again to make a little bit of profit, like big banks and stuff like that. But, in most, fair markets, you've got real people exchanging because they see differences in perceived value, which is huge, right? And so that's, this core foundation, right? Is you have to have volume. Because, without volume, you get nothing, right? You cannot trade empty candlesticks after empty candlestick after empty candlestick after empty candlestick. You need to have, a green candlestick, or you need to have a red candlestick. And it's one or the other. It's not, empty. Because you cannot trade this crap. The only thing you can trade are real volume, right? Real candles that, at the bottom of the chart, they've got what? They've got volume. They've got people exchanging hundreds of thousands, if not millions of shares. And that's foundational. That's core. That's huge. And she actually talks about this really interesting thing, and it comes into this second principle of patterns. And what's interesting is she's looking at, I see this all the time, especially as I'm investing with some of my buddies and some of my trading groups and just students and clients. Everyone's always watching. I don't know if you guys saw, he's such a fun guy. I love him. He's on CNBC, he says Mad Money, right? Jim Cramer. And he's got a really good book. It's a really good book. And Jim, he's always on TV, he's just standing in front. He's got literally hundreds of millions of so many people sitting there with, probably collectively billions of dollars in their hands. They're all watching Jim on TV. And then Jim comes up here, he's like, buy this stock, sell this stock, buy this thing. He's just so fun. Oh my God, I love it. Oh man, I love Jim. Okay, so you got Jim on TV, right? And he's telling everyone to go buy this stock or go sell this stock. And what's interesting is like Stephanie and her team and the traders she worked with, they all noticed a pattern. Now they weren't working with Jim Cramer. They were working with an older newscaster. It was in the 90s, called Dan Dorfman, and he was like, the super cool, exciting guy on CNBC at the time. And he would always come on TV. Yeah, Dan on TV, and Dan would always come up there and he would have people call in and ask him what he thought about the hot stocks to buy right now. What's the best stock, what's the hot stock, what's the next buy, like how can I get rich in the next 5 days, it's crazy stuff like that, right? And so he would like critique these stocks on live TV, just like people, newscasters, what they do today, right? And what's interesting is, if somebody called in and gave him a stock, and he told everybody, he said, wow, this stock is awesome, everybody should go and buy this stock. What happened to the stock price is really, really interesting. So, say this is sort of trending on, and then you have like 12 noon right here, and this is sort of where the TV station comes on. So at the beginning, after he says, everybody buy, the stock could go up a whole bunch, right? Maybe it goes up like, again, these are larger companies that they're talking about, so they're not going to move as much as 9 to noon stocks. But let's say, maybe they go up like 7%, right? And then, as soon as that happened, over and over and over again, Stephanie would see these trades, and like this happened hundreds of times. It would go up a whole bunch at the beginning, and then it would crash back to where it started, right? And so she saw this happen hundreds of times, and what she recognized was, and this is key, this is the foundation, this is the principle, she recognized a pattern. Right? I mean, the pattern, there's so much I could dump on you right now. I could literally, patterns are so powerful, so huge. Like, I remember some of my earliest stock trades were in, like, movie companies or Amazon. It's all these companies. And, like, you would see, like, every single year in December, from December to January, from November to December, Amazon goes down, or AMC goes up, or Regal got bought out. But they got bought out really well. They got bought out right when they always go up. And if you look at a stock, you look at the history, and every single time it goes up from a period of time to another, so like for like a 1 month, right? Every single January it goes up, every single November it goes up. Those are sort of the you look at Texas Instruments in September this year, they went up freaking 40, 50, 60%. Every single September they crush it. Because what? That's when people go to school and people think that Texas Instruments makes calculators, even though most of their business is wholesale semiconductor manufacturing, which is just a fancy way of saying computer parts. And so because they associate Texas Instruments with calculators and school starts, everyone buys their stock and they crush it. Even though like 1% of their sales are from calculators, which I just think is really, really interesting. And so she saw this pattern happen hundreds and hundreds, like times 100, right? And what would happen is this guy, he would come on TV and he would say buy it, and then the stock would go up a whole bunch, and then it would crash super, super quick by like 1, 2 p.m., right? Now, again, I'm not a big proponent of like trading after, noon, just because I like to think that like 80-20 principle, right? You're going to make most of your money in the first 20%, right? For 9 to noon, that's sort of like my ideal trading time. So this is kind of something I wouldn't really do, but it's really cool what they did. Since they saw this pattern, right? And you're making 6 or 7% here. You can leverage that with options. We'll get more into leveraging. We'll get more into growth. We'll get more into the power of inside or mass movement of investing throughout this module, not this masterclass more specifically. But this is a cool little thing that happened where she recognized a pattern. Same thing I was just talking about with month-to-month patterns. This was a daily pattern, and this would happen in just a couple of hours. This guy would say buy a stock, and then it would everyone would buy it, and then it would crash. And so what they did was really, really interesting. They had their firm go and buy them lunch every single day so that they could stay here, or their firm decided to buy lunch every single day so they could stay in the office and they could short these stocks that went up a whole bunch and make a ton of money in the process, which was actually like super, super interesting. I thought that was really cool. And it just all came from this concept of recognizing a pattern and then turning that pattern into money. Because in the stock market, it's one of the few circumstances where like math or pattern recognition can just turn into money, which I think is just ridiculously cool. It's just really sweet. In some of the later weeks of these courses and of these modules and of the 9 new members area, we're going to talk about something that's based on this idea of pattern recognition and patterns, especially sort of in those examples I talked about earlier with like long-term patterns. If you want to, like if 9 out of 10 times in the past decade a stock has gone up from like October 3rd to October 20th, it's probably going to happen again this year, right? And so that's sort of that's a much larger concept, but it's all based on this foundational principle of patterns. You know, because patterns are core, especially in the market. Patterns are very reliable. And so we'll get more into this idea of patterns. We'll teach more about this, and we'll develop this more. Not in this week. This week is all about dark pools, but we're definitely going to work more on this concept later in this journey through the membership site and through the area, through the implementation program. Because this is huge, and this concept alone literally is 6, 7, 8 figures. It's really big. So definitely be excited, be pumped about some more content about pattern recognition, which is super cool. But I'm gonna move forth, I'm gonna move on, because I do want to get you guys the dark pool secrets. Okay, so the third one, and this is really the most powerful one just in all of life, and that third foundational principle, the third thing she learned that was so key to her success, so key to really getting to that next step, was community. Now, for her, oh my gosh, I'll tell you guys a little secret. A long time ago, I wasn't able to snap, but now I can. So think about it like this. Like, if you're stuck at a barrier, right? You're trying to get to that next level. For me, like, I wasn't able to snap for literally like 15, 20 years, not 20, but a lot of my life. I was just unable to snap. So you might be starting out at this little area right here, and you might have no clue what dark pools are, right? Most people, you're going through this module, you're like, what the heck's a dark pool, right? And how can I invest in dark pools or trade in? And so you're here right here now, right? So all you have to do is learn. I asked my friends, hey, how do I snap? How do I snap? How do I snap? How do I snap? They taught me how to snap. I'm teaching you how to invest in dark pools. This book will teach you how to do it. And then you start practicing, and all of a sudden, something that you weren't able to do before, for me it was snapping. For me it was investing in dark pools. Something that you weren't able to do before successfully, now you learn how to do it. You put in the time, the effort, and the energy to learn the strategies. Then you start to practice and implement for just a little bit of time. And then what happens? You have the success, you have the growth, and you freaking start applying it and crushing it with it. And so that's the goal, especially throughout later parts of this week, is to get you guys to this point right here, where even though you're starting out not knowing what any of this stuff is, just like I had to you might have a little bit from chapter 36 at 9 and noon, it's all about actually getting to this next level here, right? And so that ties into community, right? So community is like so powerful. So for her, right, she was always surrounded by, all these really big traders. These guys are literally trading, 6, 7 figures on a daily basis, because they're on this huge Wall Street firm, and they would trade their own money, they would trade. And Stephanie was like the only girl there, which is kind of funny. And basically what happened is she got to the point where she was so good, she started mimicking, her mentor so often. And actually her mentor went away, and she was like literally surpassing her mentor in the workplace and becoming that new level of success, that she started teaching everyone she could, started mentoring other investors, right? And showing them how to trade really well. She started spreading her skills. She started teaching other people how to make this jump right here so that they could go and actually implement it and have the success. That was the shift. That was the huge part for her. And so for you, what you want to do, right, is you want to surround yourself, and this is kind of a concept that we go so much deeper into, the How to Win Friends and Influence People course. Like, if you guys haven't gone through that, I would highly recommend. That stuff is game changing. And it's all based around this concept of what? It's based around what? The mastermind, right? And the core, right, is to get with a group of successful individuals, learn from them. So for instance, like some of these investors, they were learning from Stephanie, right? They were learning from the best. They were getting their information from the top. As they were learning, they actually went out and started applying. And there was this one really powerful story of this guy who literally just applied what's in this book, and he made like $1 million in his first year, which is like, so cool. And it all stemmed from literally going from nothing to, she got awarded, Trader of the Year, and then you got 250 grand to manage. Just absolutely crushed it at the firm, because she went from the bottom here to the top, right? By learning, right? You gotta learn, and then applying. And that was really the thing that changed everything, was when you go from that base state to actually doing it and crushing it. And you do it with a community, right? So everybody can go through this process at the same time. Everybody can learn at the same time, and then everybody can apply it at the same time. Everybody can grow at the same time. Everyone can trade at the same time, right? And they would literally trade in like groups of 8 or groups of 10. Like they would all come together in a big huddle, and you would have like guys all around it. Like they have this big table, and everyone would just trade with each other. And they would call out their trades. They would absolutely crush it, because they were all synced together in a collective mastermind, right? A collective community. And instead of it just being one person's brain or another person's brain over here, or maybe one guy's brain over here, everyone came together under the mastermind. And now, you've got 1 + 1 + 1 + 1 + 1 + 1 plus, 10. And instead of having like 15, 1 + 1 + 1 + 1 + 1 + 10, is like 50, right? Because collectively, they're so much more powerful than the individual. And this is a concept I wish I had. You know, the Think and Grow Rich course it's a pretty hefty course, and I can't go into like every single detail of this concept because this concept is so massive. But think about the thing, if you've gone through the course, like think about those concepts that we teach in the Think and Grow Rich course, because this is massive, and it applies directly to this idea of working in a community and working in a mastermind and working in a group of people that are actually doing it day in and day out and have the experience, they have the education, and they know what the heck they're doing, and they're absolutely crushing it. Because that's exactly what Stephanie did. She surrounded herself with successful people, and she made others successful because of it. And it just works so well, because it's so much easier to have that huge edge, to have that big success. You know, for her, like, she was doubling her IRA over and over and over again. Why? Because she was surrounding herself with the best influences, best sources of inspiration to actually call and what, you know, I have so many people I will literally teach them for free, because I know that if they learn to get really awesome at 9 to noon investing, then what's that mean? It means everyone is going to collectively have a huge edge. You know, you have a giant room, everyone's focused on one single goal, which is to make cash, absolutely crush it, and then they all come together and everyone's like, hey, you know, this is the ticker of the day. This is the ticker. This is the ticker. This is the ticker. This is the ticker. I'm in this trade. I'm in this trade. I'm in this trade. I'm in this trade. And everyone's like calling out exactly what they're doing. Then you can just follow the group, right? I've had so many individuals, like, I don't have time to spend like 40 hours a day looking through tons of tickers. But if you have like 40 people that each spend an hour a day looking at stocks, all of a sudden you're able to leverage all of those individuals in one place. And this is something I've done, right? Like, I'll teach people how to get really great at investing. And then what? They'll feed me tickers. They'll feed me positions, feed me investments. And, you know, I'm not going to take everything, but it's significant. I might take maybe 1% of the things that I see. And so to be able to have a couple extra 100 stocks coming in every month that I can, you know, filter down into actual positions, that's invaluable, right? And that all comes from what? It comes from having a community of individuals to communicate with, so that everyone can come together and pool their minds to find the best investments possible, objectively, right? Which is really powerful. I was, you know, looking a lot at like investment committees. I mean, I'm in investment committees, investment clubs, and these places where they have their own portfolios they manage. And what's interesting is, like, very often you have awful returns, because people are kind of more focused on making others feel good or making them feel accepted or making them feel all warm and fuzzy, instead of actually getting the objective best return possible in the market. And what's cool about this idea of working with others, especially digitally, to come into a community where everyone is sharing, you know, investments, right, and positionings, especially positions, right, and they're all there, you know, saying, hey, look, this is a really ticker, look through these tickers real quick, and then someone says, hey, that's a really good position, and then you can look at that and make the investment if it fits, you know, technical analysis and fundamental basics of how to invest really well. Like, the moment you have that, you're gold, right? And it all comes down to what? Comes down to this core foundational concept of leveraging, you know, others, right? And having them come together as a group so that they can work together to actually get the best position. So that was her third little secret. So this idea of volume is huge. I mean, that's like the foundation of everything. You gotta have volume. That's the gasoline in the machine. And if you don't have it, like, you can get screwed. She tells this story that I thought was just insane when I heard this. I was like, whoa! She tells a story about these stockbrokers on the floor, the NYSE or the NASDAQ, and they would literally ask each other, hey, you know, how do you want this candle to close? Do you want this candle to close red, or do you want this candle to close green? And what they would do is just berserk. And they would say, hey, do you want me to close this as a green candle, or do you want this to be a red candle? And if there was, you know, little teeny amounts of volume in the stock, they could literally manipulate the market as market makers, just spend, you know, a couple $1,000 to make the stock go down a whole bunch, and make the stock go up a whole bunch, and try to fake out investors by, like, just manipulating what the price looked like, right? And so that's why volume is key. You know, you can, if the volume's only 10,000 shares, then you can buy 1,000 shares and really move the price quickly up or down in any kind of situation you want. If you guys remember candlestick patterns from 9 to noon, and we've been learning about candlestick patterns, like, it's this same idea that if you can create a fake candlestick pattern and then make people think that it's going to go up a bunch, and then sell a whole bunch when it goes up a bunch, and then, you know, dump it, then you can crush it, right? Same thing. If you want to make a fake candlestick pattern that makes it look like it's going to go down, and then everyone sees that and they say, oh, it's going to go down, you know, like a red, green, red. Everyone thinks that's going to go down. Then it goes down a whole bunch. You buy everything and it explodes after that because you manipulate the market. That's exactly what some of these institutional managers were doing to sort of manipulate prices with low volume, because you only need to buy like 1,000 shares or something. So that's why volume's so critical, right? You want to have a lot of volume. If you have millions and millions and millions and millions of shares traded, especially on 9 noon stocks, you'll have literally tens of millions, hundreds of millions of shares traded. And so it's going to take like millions of dollars to create a fake order. Like, people just aren't going to blow that kind of cash to try to fake out the market. It's just too expensive, right? And so that's why volume is critical, because if you don't have volume, if you have empty candles, you can have sort of some of that manipulation. Especially, you see this a lot of times in really cheap, sketchy penny stocks, especially OTC pink sheets, like these really, really, really cheap, like fractions of a penny, and they have tons and tons of manipulation and very, 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 very low volume. And everyone's like, oh, buy this stock because it's got no volume, and the spread's like 50 cents on a 4-cent stock. It's all because of what? It's because of manipulation. So you want to make sure that you see tons and tons and tons of volume in the positions that you're in, the positions that you're thinking about getting in. And this isn't a problem with 99% of like your swing trades or your long-term investments. This is more crucial for like those intraday 9 to noon trades, where you really, really need to know your stuff. You need to get in quick. You need to get out fast. You want to make sure you've got tight spreads, and of course tight spreads, it comes from high volume. So you want to make sure you have high volume. And that's just the foundation that we've been teaching for so long, but it's really, really critical to see it here. And that story of people on the floor of Wall Street literally being able to move candles just by buying and selling off of low volume, that was a game changer for me. I was like, wow, there are people that will literally manipulate the stocks. They will manipulate the charts. And there are insiders that are just trying to screw people over and make tons of money for themselves while not being fair to the marketplace. And I hope that's something that will change. It's just tough right now because, again, most asset management is pretty centralized. And so that's sort of my overarching long-term goals are based, or if you guys have been thinking for a rich course, that my overarching long-term goals are sort of based around, sort of decentralizing that asset management, which is pretty huge. And hopefully that would kind of help stop some of this bogus, investment manipulation. But also another great way is to just focus on volume. And if you have high volume, you're going to be good. You'll be solid. And then the last thing we learned, you've got community, you've got volume. The last thing is patterns. Patterns are just massive. I mean, I could talk about them all day. So again, we're going to have a whole nother week on like pattern recognition, and it's so much. It's not like technical analysis or like technical patterns, but it's like actual patterns in the underlying asset. So I'm excited to share that with you guys in another week. Not this week. We're going to go hard into dark pool secrets. So super excited, guys. Hope you get a ton of value from these foundational principles of the dark pool and of this investment. It's just so powerful. I'm super excited. Now we're going to dive right into like the actual fundamental application, how to do this, what this is, and how to profit from it, which is pretty sweet. So hey, hope you guys get a ton of value from this. Go out there, apply it, absolutely crush it, and I will see you in the next module. Thank you. Bye.